Low Warriors. How's everyone doing today? Sinatra, Mike, Bran. Yes, Jackson Hole, which was by the way, named after Mr. October, Reggie Jackson. In case Kman, you didn't know that. Jackson Hole. Glenn, James. I think we talked about it last year. I made something else up last year. Kurt B, how are you? Everyone doing okay? Richard, Pat, Kurt, how are you? There's Blake. Philip,
All
welcome.
here. Good morning, Dale.
Good morning, K-Man. Yes,
Well,
Jackson Hole named after Reggie Jackson, Mr. October.
Mr. October, I didn't know that one.
Oh, okay. Anyway, that's what I think. And
Never
I
too
want
early,
every I want everyone to
never,
join. Go ahead. What?
never too old to learn.
No, we're either growing or dying. So
Uh-oh.
here's to someone who's still growing. Happy birthday to
Ah, yeah.
you. Happy birthday to you.
Yeah.
Happy birthday, dear Pipzar. Happy birthday to you, buddy.
Oh,
Hope it's a
thanks,
great
Happy
Dale.
year for
birthday,
you,
Blake.
man.
Thank
Huh?
you. Thank you.
Anyway, so okay, let's see how we could ruin your birthday. Let's trade. Let's trade.
Let's get wrong sided in the market.
Yeah,
Awesome.
let's anyway,
Yeah.
let's talk about things. Okay, so we're all glad Blake was born so that we have what we have right here, all of us together working in a pretty difficult endeavor. So it's great to have a place for everyone to help each other out and support each other. And this is just a taste of it here in Face. It happens all day, all night in the chat room. Okay, so CAD, took out the 36 level. No great divergence, but maybe this is the level we didn't quite get to where I thought we would, par 50, which was this line down here, par 20. Still could. Um, but what makes me doubt it is, to me, it looks like the yen, and I'll go to Kman on this. And it's what I brought up yesterday, is that we had this move, and this could just be the first part of the correction. And I think Grega would call it a B, and this is B, this is A, this is A, B, C for B, and now we get a potential C wave. So let's call the first move 6 to 8, and that could take you right back to the breakdown at 52. So that would be supportive of the dollar. So just like a lot of the weakness in the dollar up until recently was mainly the yen. The dollar's weakness was the yen rallying, the U.S. dollar yen rallying the way it did. So perhaps a C wave. We get the yen up there, and we get pullbacks, and we get pops in Canada, etc. I just want to make. I know everyone loves the metals, okay, but just be careful, okay. Um, you know, I look at it, and I haven't heard a gold bear out there anywhere.
Dale, we've
They've
been
been
saying that
real.
for a long time, and I was just reading something on that, like just yesterday, matter of fact, and you're right. There's no bears out there. It's a very one-sided market. Oh, you know what it was? It was a bank research piece that was referenced about the market just being so one-sided that there's a risk of it's one of the big
A
banks.
flush, a
Yeah,
flush.
yeah, yeah, flush, right, exactly.
Yeah, yeah. So I
Straight
think
flush
that,
or just a flush?
yeah,
Yeah, or just maybe yeah, it was maybe only for a number one and not a number two,
I
Dale.
I
yeah, it
suspect
could be.
I
It
I,
could be. I'm not sure
I
about
suspect
that
that
aspect.
bank. I suspect that bank was listening to the flow show or has eyes in our chat room.
Yeah, well, that means that yields are due to pop, where you could have a C wave here as well. in the 10-year. Okay. And the S&Ps will just keep marching along. So that's what I see this morning. It's been a nice ride down in the dollar. This is, it may not have bottomed, but any rallies back towards, 102.5, 103, you have to sell this dollar. I think it's really, and a lot of people are saying it hasn't broken down yet because they're all looking at the par level. So, I know that sentiment has shifted much more negative towards the dollar, but it was the other way before the last prior week. So this is when people will declare, and where there'll be a little bit of panic starting to develop is under par, because the people are still calling this a triangle. So we don't have a breakdown yet. Okay, so all of this bearishness I've expressed has been in anticipation of the test of the battleground. Now we're going to see. So, Kay, what do you think about that potential for the yen
Yeah,
to?
I mean the we had those revisions yesterday, the BLS, the bullshit revisions.
Oh, what 600,000?
800. It was minus
Oh,
800.
eight
But
hundred. What's the,
the most
800
low.
here, 800 there. What's the
Yeah,
difference?
exactly. But the thing is, okay, there's two things about it. It brings us, first of all, much closer to the household data that's coming out roughly same time as the NFPs. And secondly, there must be a bit of an investigation being done again at the BLS, because they apparently gave the number to three banks, calling them up in between the first report and the final publication of it. So
Yeah, I saw that. That's
yeah, it was
crazy.
incredible, incredible. The banks were calling up, and somebody at the BLS just gave them the number, which is which is
Illegal.
very, very striking.
Kinda. Yeah, little
Well,
illegal.
well, I don't think it was should have been legal for Fed guys to have been trading either.
Yeah,
Yeah,
well,
but that I guess this is even bigger. Okay, so
right. So yeah, the yen. It stopped right on a bit of a retracement level right after that BLS review. Um, one of the reasons why we are bouncing today, okay, there's a bit in the yields, of course, but it's especially ahead of tomorrow's Ueda apparent appearance in Parliament. I think he's probably been going to grilled about the outsized reaction that the yen had after the latest rate hike. Well, it had been helped, of course, by that weaker U.S. labor report as well. But so he's expected to have to defend himself in Parliament tomorrow. So the market may be thinking that he may screw back just a little bit on the hawkishness that he has. I think that's really what this bounce in dollar yen. Now, can he go further? Yeah, absolutely. And can he say something back more dovish? Absolutely. But I think what we have now is pre-Ueda, pre-Jackson Hole trading as well. Perhaps a bit of the US PMIs, but the rest of the dollar's not really moving that much. The
Hey,
majors, I mean,
well, there's an Go
oh,
ahead,
I'm sorry.
please.
Can I jump in here
Yeah,
really quick? I know
go,
you're,
go.
discussing the dollar yen. I wanted to actually ask you something in particular
yeah,
about a dollar pair that's actually on the move right now, and that's the dollar Mexican peso.
yeah.
And what
Take
I
it, Blake.
found, what's that?
Take the charts and
Oh, okay, I
talk.
will. I wanted to ask you, Kman, about this because I mean, first of all, I'm long, which obviously I'm happy about, and I can't say I'm happy about every other dollar position I'm in, but the dollar Mexican peso is really just ripping, and we just
Getting
ripped
hammered.
past the 161% extension. It's been on fire, and
Yeah,
here's the thing, because obviously, just like you or anybody else that's trading quite actively, I watch most ticks, moves, correlations, divergences. Every time the dollar ticks basically lower, the dollar Mexican peso ticks higher. Then the dollar like kind of recovers and the dollar Mexican peso kind of subsides a little bit. And so
Yeah.
you're seeing it rally in the Euro Mex too, which is quite aggressive. We've have almost a recovery back to the spike highs. And I'm wondering if this has to do. I know Scheinbaum doesn't take office until the end of no October 1st, I believe.
Is it
And
October 1st or
so
mid-September somewhere? Yeah.
yeah, and it's October 1st or
Okay.
September 30th. It's either or. It's the last day or the first day of the October. I can't remember. I don't know if it's that. I haven't been able to put my finger on it, but it's something that we have to be looking at because it has just gone off the rails. I
Yeah.
mean, we are just, squeezing like it's nobody's business. What do you have any thoughts here?
Yeah. Look at if you put the fibs on it from 20 and a quarter down to where we retraced 1861, you can see the 50% is around 19 and a half. So we are very, very close to that now. Yeah, I think it's the market really being worried about what they could do because AMLO and Scheinbaum did say that even before she takes office, they can already start to tweak the rules and regulations. And I really think the investors are not really happy with or at least scared of what may happen in Mexico. We also saw the data start to come in a bit lower. We had pretty weak retail sales as well.
Yeah.
And today, CPI a bit lower, economic activity negative. I mean, data
I mean, we
are
did have mid-month CPI, I guess, but
mid-month CPI flattish
yeah.
to smalls negative even. So all of these points to perhaps a Mexico cutting rates, next month or so. So yeah, and then the rest of carry trades in the mix going into other currencies. I read a lot about stuff like people even buying Turkish lira or Argentina, buying ours. So I mean, yeah, it seems like a global move out of the Mexican peso. And where that can go, it all depends. I mean, imagine if risk would turn sour as well.
Oh, I mean, we're
That's
going to be trading it. We're going to be trading at
are
21.
flying, but imagine if risk turns sour, this Mexican peso can go back up to 20.
Yeah. Oh, I would argue even higher. I mean, you look at like this. This is the
Yeah.
channel that I'm following, but it's not like that's an unseen level. I mean, 2021.
No,
We've been as high. If people don't recall, we've been as high as 26. So I mean, you're talking maybe a 38% recovery. From the actual lows takes us
20.
above 20. 50% retracement is 21. So I mean, that's not uncalled for in a
No,
situation
and
like this.
and if you look at the amounts that have been thrown at it to do the carry trade and stuff, yeah, it's still possible. I do think though that we have to be a bit careful when Scheinbaum will take over, because imagine that she's a little more soft towards investors, that carry trade or at least amounts can come back into Mexico as well. So because I'm actually a little surprised, since Kamala Harris is catching up on Trump, they may be less adverse towards Mexico. That we did not have any impact of that at all. We know that Trump is a risk to Mexico, but the Kamala Harris should
Isn't it
be
really like what you
less of a
guys
risk.
are saying, a risk off sign, as well as even though the market's gone to new highs, we just had record highs in
Mm,
gold, the utility stocks, all the defensive areas of the market have been leading, outperforming the S&P.
yeah.
So, it seems like money flow, they can't do it in a day. They have
No,
to,
of
it
course,
takes time for them to,
a
you
lot.
know, uh, reallocate.
A lot, and it's a very uneven risk market that we have now. I heard you talk about it with Ryan the other day. I mean, we don't see the same risk markets as we saw years ago. You know, there's just so much more money floating around in the system that risk completely took a different face these days. You know, we can't compare the markets that we know from 20 years ago and just trade risk on and off. It's not as simple as that anymore.
Yeah. Going back, and I
Darn
just want
it.
to I want to talk one last thing about the politics, U.S. politics. I don't think I still don't think we have 11 weeks. We're coming off the DNC. Yes, Harris has a little bit of a bump right now, but let's get to the debates. Let's see how the markets respond once we get into an actual debate. People are still they're enamored with, oh, look, we got a younger candidate. Oh, she's a woman, a woman of color too. People are excited about it, and she's got that natural DNC bump. That's going to fade. And a lot of this is going to fade until we get in. And once we get into the debates and we get, into, I would say, the month of September, we can really start trading some of this I think the political noise is going to get louder and it's going to be it's going to be more tradable. But yeah, I still trying to put my finger on why the dollar MEX is so weak. I don't know, but I just thought maybe you might have sent something or read something that I didn't. I haven't been able to pick up on exactly why. We have been obviously talking about it in the chat room quite a bit, in the ForexAnalytix chat room. And if you're not in there, in those conversations, you should be. But we've obviously we have some upside targets that look very doable. And as what Kman was just saying, this is a 50% retracement. I'm going to delete this here in a moment. That's the 50% retracement, but 50% is it's not a fib level. It's just 50 back, so given the fact that we held the 618 so strongly in a previous pivot and breakout point so strongly, it does technically it still suggests that it should reach higher. And what happens if the dollar does correct? And let's talk a little bit about these PMIs that came out overnight. I actually was stopped out of my euro sterling last night. I was playing it on the long side, it stops right under 85 because I figured, well, if I got lucky and you got a little stronger Eurozone PMI and a UK PMI that was a little weaker, but we got the exact opposite of that, pushed through the stops. What was your read on the Eurozone and UK PMIs?
We have a new area of exceptionalism, Blake. I mean, it's the UK exceptionalism.
Yeah, it is, right? Look at
compare it to the European PMIs. I mean, France had a jump in services PMI, but that's the Olympics, right? And if you look at the German PMI,
yeah, that was Olympics.
The real face of Europe. They were crappy, really crappy,
yeah.
The German PMIs. But so yeah, France is clearly Olympics. We still have a lot of divergence between the manufacturing and the services sector. That's just continuing. It's global. But then you look at the UK data. They are pretty good, even the manufacturing. So yeah, that's basically it. And sterling has been strong globally, right? I mean, we can even say, barring that blip early August or so, it's been relatively outperforming sterling again, barring that week where it got hammered. Yeah, I don't see much to turn euro sterling around from here. I'm not saying we're going to go straight back to 84 the figure, but I don't see any reason to buy it. That's simple.
Yeah. I mean, and that okay. Let's talk about the Eurozone just in general. I mean, I mean, I can't. I'm not going to deny the fact that the dollar is breaking down. I mean, we can look at the dollar index any which way you slice it, and the dollar index looks very bearish. And tomorrow, we're going to have to walk away from Powell's statement or his speech, thinking, "Oh my God, are we even going to get a rate cut? This year?" I mean, that to me is like the only thing that's going to turn the dollar and reverse this whole move tomorrow. I mean, you look at this the sustained move of the dollar index. I've been, from the week ahead video from last weekend, I was like, okay, I'm looking for maybe a false breakdown. But looking at the dollar's persistent weakness and, following just the price action, I'm going to have to see something really, really hawkish out of Powell tomorrow that changes my mind. Is there anything right now that you're seeing? And again, we have you just pointed out, Kman, the Eurozone PMIs are absolute crap. But look at the dollar price action. Is there anything
But
that
that's
would
the
turn this
thing.
dollar higher in your view?
Yeah, that's the thing. I mean, if you look at it in general, the US is the biggest market. So if the dollar turns around, the people tend to forget about the other side of dollar pairs for a bit.
Yeah,
So it's really the dollar that's being traded, right? No, I don't see what Powell can say because Powell is not going to walk back on a September cut. That's virtually impossible. He
right.
announced it. I mean, and over the last FOMC, and we got the confirmation yesterday on the FOMC minutes. He virtually announced the cut. I mean, the only thing we need to know now is what size will the cut be. He won't give
And
it.
how many, right? How many from here? Because how about if it's
Yeah.
more of a, hey, we're going to cut rates because we need to normalize rates, but don't think that this is a normal path. And then we get the old,
Mm,
oh shoot, is it a one and done? Like, are we, do we get one and maybe one in December?
mm,
And then, I mean, the market right now, Chris Weston, we were having this conversation last night on the trade-off. He's like the swap markets are pricing in 4 cuts by the end of the year. How about if that changes to 2 tomorrow after? Is that enough to turn the dollar? I'm asking you, Kane.
It's well, I don't think Powell will have that impact, to change the market really from 4 to 2. But he could shave off 125 BP curve. That is possible. If he says like we expected this minus 800 revision somewhere because BLS is basically bullshit. So if he says that, then we may have a bit of a repricing, a bit of dollar revival, but he's not going to tell us that they are not going to cut in September. He's probably not going to tell us how many times they are planning to cut. I think he's just going to steer the line, and unless he really says tomorrow, and that's then the other side of the medal, that yes, we were surprised by this revision, then that means that he opens the door to bigger cuts.
He
But
can't. He can't. I
he
don't.
won't.
I
He
would say
won't.
he can't because I don't know if it was last press conference or the one just before where he said, I vividly remember, and I could almost see it in my head, in my mind. He said the employment figures may have been overstated,
Yeah,
and so
correct.
the Fed's very well aware of
Mm,
the BLS and the revisions that were coming out. How aggressive, I don't know if they were maybe that informed, but they know that they're
yeah,
overstated. So I can't imagine him going, oh my, oh
you're
my
right.
God. Yeah.
He made the comparison with the other reports, right? He
Yeah.
he
Yeah.
did he did. So I mean, yeah, if he says tomorrow, yeah, that was the expectation because a bit in line with what the Schmidt guy said a while ago, right?
Yeah.
Um, that they were aware of it. Then the market will probably have to just shave back a little bit on the expectations. But yeah, I think he's not going to give the 50 BPs on a plate. I've been saying that he's not. But what is going to be determining is the next NFP, the next
Yeah. No, I was
jobs
just gonna
report.
say, yep, 2 weeks, right?
And the thing is that people will be looking at both the now officially the jobs, the NFP and the household report. Because so far people have been saying like, yeah, but BLS always massages the numbers and the household report are this and that, and it's a typical zero hedge thing. But now the market is going to watch the comparison between the household report and the NFP. So
Just
if
another thing we can't trust. Add them up. There's a
Right.
we
there's
add
a
them up and
mountain
divide by
there's a
two,
mountain
Dale.
of them. Huh?
Dale, add them up and divide by 2. You will have the real number.
You have the
It's a
true number.
It's a Mount Everest of things
Well,
you can't trust anymore.
so that brings us to today, and let's talk a little bit about today, and let's get some actionable ideas for the listeners at home, or in their home offices or whatever. I do think that the weekly unemployment claims are the most important weekly. Well, it's the most real time data that we get. Again, do you trust them? Do you not trust them? But we are going to get them here in just a few minutes. So, I want to point out just a couple of things. As far as the euro goes, like I am a buyer of euros on dips. If we're so lucky in the next couple of days to get the euro down at 1010 or 110 to 110.50, I am going to be a buyer down there. I am going to, buy it. The one thing I want to say is the risk right now is you do have this bit of a false breakout above, these highs. If the dollar continues to push a little bit today, and if you look at the dollar yen, you look at what's happening in yields, we are seeing a bit of a recovery in yields. And I will point out this chart, Dale, because I was just talking to here. I'm going to show you really quick. Here's our chat room. This is a conversation I was just having with Austin. And thank you guys for all the birthday wishes, by the way. We were talking about the 10-year here, and you can see how the 10-year's correcting lower. This is the ZNs. And I said, this will help the dollar yen further if we correct lower.
Right.
And he was asking about, what's the probabilities of that happening? And we were having a conversation about that just about 30 minutes ago. And the fact of the matter is it should continue higher. I mean, the chances are that we have more of a upside continuation. But if we do correct lower, which is, I think, still a pretty high probability, all in all, if we correct lower like that, that means yields are going up. And if yields are going up,
Dollar bounces.
the dollar's going to bounce. And that's following. Remember, we had a I would say fairly strong 20-year auction yesterday. So, yields naturally went down after that. But yeah, we get a little bit of a pullback here in yields, or excuse me, and yields, as they start to bounce, maybe that's supportive of the dollar to pull back a little bit. So that is where I'm going to be using an opportunity like this to be long euros into a dip. So how are you going to play, between today and tomorrow, Kman? What are you thinking?
I bought a bit of dollar rand. And the dollar cat, there's this 130, 35, 60, 50%. I'm gonna hide my stops below there, and that's about it. I'm traveling.
I'm with you on that one. Yeah. I'm
No,
with you on that one.
very
I'm
light
along
in
with
the
you.
rest. I've played fooled around a bit in the end, but nothing really, because I think it's all ahead of UEDA tomorrow. UEDA and Jackson Hole, so it could be volatile. But what is UEDA going to say? He has the potential to put it up or down 300 points. This dollar yen, right?
Yeah, he's got to defend himself, right? I mean, he's not going
got to defend himself, but
he's
then
not
when
going
he
to
says
cower.
like, "Oh, we are happy about the wages. We are happy about this." I mean, this is not our fault. This is because we got a weak U.S. Jobs report. What happens to dollar yen? All of a sudden, you're back at 144 probably. It's a bit of a lottery going into UEDA tomorrow, I think. Yeah.
If you guys didn't see this yesterday, late in the day yesterday, the dollar yen hit the 618 retracement, right? That 144.62, and we're like, the dollar yen's at 144.62. The bear should pay attention for a reaction, and boy, did we get a reaction. I mean, that thing has bounced literally 150 pips from there thus far, and it still looks really constructive, especially if we start getting back above like 147.
Once that red 200 MA.
This is a 4 hour, so that's far away. But like
that's
even
the breakdown.
Yeah, I mean, you could see up here 147, and this is going to be really critical is 149 and change. But Dale, what are you looking at? Oh wait, shoot, we got weekly unemployment claims. But what are you looking at while I get ready for this?
That remember what people used to say about the S&P? They had that cartoon BTFD. That if you employ that
by the effing dip.
Yeah. So I think you can do that in the dollar, in the euro. I think for weeks and months to come.
You know, I'm with you,
Just
Dale.
get into that mindset of buying pullbacks. I
All right,
think
I just
in
have
time.
the dollar yen since it was the easiest, and we got these jobless claims coming out. So, um, let's watch. Here they come. Well,
As
weaker than
expected.
expected. Not a
As
lot
expected.
though. You know, downward revision. But look, we're nowhere near 250,000. So if you are going to sell the dollar on this, I would highly recommend that you don't, because the dollar's already oversold. So you're going to see and you can see how even the dollar
Yields are
yen
coming.
spiking, yields are going higher. I mean, these aren't bad numbers, guys. These are not, oh shoot, we're going in a recession number.
No.
Like if you looked at the BLS revisions yesterday and you're like, oh, look, we are going straight into a recession. The jobs report's been lying to us, blah, 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 blah. Let those weekly unemployment claims get over 250,000. Then we'll talk. Until then, this is all dollar positive. Yes, we missed it, but you're going to see the dollar just whoop right back up. You know, don't get carried away with the
Not
BLS
much of a
numbers. And
reaction. Yeah.
yeah, I mean the knee jerk is like, oh, I want to sell dollars just because it
More in
missed
S&Ps.
5,000. That's crazy. Yeah, that's
Yeah.
crazy. So anyway, hey, I want to say just a couple of things before I let you go. Thank you, Dale, for singing happy birthday. I'm not a big birthday guy. Like I could
Yeah, I
really
know.
care less, but it's really nice to hear your singing voice. We all here, on all of us listeners, we love to hear Dale sing. Your karaoke days are not behind you, buddy. They're still many years ahead of you. So appreciate the well wishes. And guys, if you haven't tried out ForexAnalytix, do so. Also, don't forget the trader funding program. We're doing something special from here on out, and I'm meeting with somebody in a couple hours, actually. A new TFP trader. I met with one yesterday. If you're new to the trader funding program, you're going to get a one-on-one consultation with me. I'll do you a little onboarding, show you what tools you have available to you, give you some tips and tricks on how I pass an assessment. So if you want to access larger amounts of capital, there's a way to do it, especially with the volatility that we have right now. And if you're taking a reassessment, that means you failed an assessment, which does happen. I failed my first assessment. If you fail an assessment, I'll go through with you some of the things that I've done to pass assessments. So, and hopefully you can do it a second time around. So anyway, if you want to learn more about Trader Funding Program, just go to forexanalytix.com. Dale, I'm going to pass it to you because you have a really great interview today with Ben Maldonado. I always enjoy hearing Ben's longer term ideas about where he thinks the market's going. So,
well, it's going to be great to have Ben because we're headed towards decentralization, which means central banks will maybe even go away, right, Ben? So welcome back, Ben. We won't have to talk about Fed speak anymore. Appreciate you coming back.
And I do want to say thank you, Kman, for filling in with Ryan out for the next couple of days. Thank you once again for filling in. I was actually listening to the Flow Show this morning, getting ready for my day. So thank you so much.
All righty.
Have a great birthday, Blake.
Thank you. Appreciate it.
All right, Ben. Welcome back to F.A.C.E, my trading warrior brother.
Hey, Dale. Great to hear your voice. Happy birthday, Blake.
Thank you so much, my friend. Really appreciate it. Sorry, I had already
You're going to make him cry.
We don't want to do that.
Thanks.
Right,
I'll be
Ben,
listening in, Ben. Thanks for being here. All right, see you guys.
Ben,
Appreciate it.
Go ahead. Let's look at what the epic cycle is saying. Great to have you back for an update, and we're really in some wild times. I'm interested in what you have to say today, so I'm going to be quiet for a while.
Appreciate it, Dale. Yeah, it was funny. I was listening to you guys talking, and the revision of those unemployment numbers is a perfect example of what we've been talking about for a couple of years now with the epic cycle, right? The net effect of events like that is it just erodes the confidence, it erodes the trust in institutions that we once thought, not 100 years ago, but just a few years ago, we thought was pretty unassailable. And so, that's a perfect example. And we're going to go through a little more of the epic cycle stuff. The theme of this presentation is I believe the proper metaphor right now is we're leaving the eye of the storm. So
Okay.
a couple years ago, we were sort of entering the storm, right? Stuff started to happen. The market started to correct. We saw big sell-offs. We saw, stuff we hadn't seen in years since like the COVID crash. The last couple years, it's been very good for risk assets. It's been sort of this free for all, and really, really big moves in risk assets and darling stocks, the Mag 7 and things like that. So it really didn't fit with being in a storm, but I think it was the eye of the storm, which we're now leaving and sort of entering back into the storm. And the reason I say that is cyclical, right? It's simply the cycle work, and we'll go over that. I see it as a major shift. I think we are shifting from slow growth or good growth to no growth slash recession. I think that's in the cards. The emotions are shifting from this greed and sort of aggressiveness to more of fear and insecurity. And these sort of dominant themes are going to be lasting for a couple years. All crises are, at least financial crises, are related to debt and debt liquidation. I think we're moving into a period where we're going to start to see debt liquidation, which of course equals crisis, and that also is going to bring in and usher in change. Some of the change you were talking about, Dale, like the decentralization. The biggest area I think that why this time is going to be different. Remember, the cycles are not exact replicas. They're sort of related. You see they're a little different. They're a little nuanced. The same sort of themes, but they manifest in different ways. I think sovereign debt's going to be the big issue this time. Last time we had mortgage debt and real estate debt. Before that, it was the oil patch and savings and loans. And so every time it changes a little bit, but the main thing is that you get debt liquidation, which creates the crisis and brings about change. And I think the roller coaster is right near the top. I mean, we are the last few chain links, when you're riding those old coasters and you hear those chains click, 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 clicking. And when the chains stop clicking, you're sort of in that suspended animation before you head down. I think that's where we are. And then we'll go over some markets as a way to play some of these themes.
Well, great being on a roller coaster with you, Ben.
I love roller coasters.
So interesting. A lot of people have been talking sovereign debt. Bonds have been actually acting okay. So this rally might be the last window. It could even go to TLT, maybe 120. Maybe that's optimistic, but 109 is doable. That this is a 4 from people I've talked to. Okay. It's not going back to where it was. We're not going to 170 TLT.
Right.
Where it was. So that would mean that, wave 5 probably is when things come home to roost. After this bond rally terminates, they're probably the best short on the board.
Well, listen, you and I have been talking for the last couple of years, and I've been bearish on bonds. But in this presentation, I'm showing we're in a counter trend rally, and there's a
Right.
good move. Like on the 30-year, I think we can go to 135 and change, 133. So there's a
Okay.
decent move coming. So I agree with you.
Yeah. Okay.
Um,
So
it's my premise now, based on the cycles and the timing, that the next act has started. We've already seen. I was expecting sort of second half of the year, and then we get second half of the year when we get a Trump assassination attempt. We get a sitting president not running for reelection, which is a very rare occurrence in this country. So the outliers and the chaos is beginning, and I think people can feel it. Um, we're gonna go over the epic cycle effects. We talked a little bit about it with you, Dale, already with those unemployment revisions. No growth with elevated inflation. That's not a good recipe for risk. The U.S. election is in 76 days from today.
well, let me ask you this: Are you and your family going to be in the bunker?
No, I don't have a bunker. I got a lot of physical gold and physical silver, but no bunker yet. Um,
I mean,
I do have a
we just
shotgun. I do, I
all
was
right.
a hot,
I'm not joking.
no, I agree. It's you have to figure, have a plan for protection for sure.
Well,
I'm
you
not a
know what
prepper.
the a plan is? I heard Doug Casey the other day. You know him, right? He was
Yeah,
famous in the 70s, crisis investing. He's
right.
still around and he's
Wow.
smart. And he said, people in Rome, when they saw it starting to fall apart, there were smart people. They got out of Dodge.
Hmm.
All right. In China, uh, during the right before the revolution, they get out of Dodge.
Sure.
Cuba before Castro, smart people got out of Dodge. And I really believe most of people I talk to are pretty smart people, and I don't know many people getting out of Dodge, even though they see this coming.
Yeah, it's well,
It's hard to do. I'm
my
not saying
in-laws
it's
are in
easy to
Nebraska.
do.
That might be a good place to go. So we'll see.
All right. Anyway, I'm just, you know,
Yeah, yeah,
guy has wisdom. So you could diversify all you want financially, but if you're not diversified politically, it probably won't matter.
yeah. It's going to be trouble. It's going to be
Okay.
trouble. So
Anyway,
we
that's
have
a gloom.
76 days to the
Just
election.
wanted
That's
to cheer up your forecast a little bit here.
yes.
Okay,
We
go
got
ahead, buddy.
76 days. It's right here. It'll be here before you know it.
Yeah.
The interesting thing too, this next one, Dale, is something that just a few weeks ago we passed the anniversary of when Nixon took us off the
Okay.
gold standard. It was August 15th, 1971. And we went from sort of hard assets to paper assets for the last 53 years. And I think we're heading back to the cycle of hard assets again. And I don't just mean of people buying gold and silver and real estate and tangible assets, but where the governments and the sovereigns and the way we create and sort of validate money is going to be through hard assets. Maybe it's gold backing, stuff. The BRICS are talking about doing that. Could be oil or other commodities that countries have. They're going to back it. But I think there's a shift that this era of paper assets is ending that are dominant, and we're going to be moving back to the hard assets mean something. Uh,
Interesting. The dollar broke down. I don't know if you think it has to take out par or not, but the dollar broke down a week or so ago on the anniversary that you're talking about,
yeah.
from Nixon taking us off that Bretton Woods agreement.
And I'm going to talk
So
about that. And you were spot on that. I was expecting the dollar to break up out of the triangle, and it has broken down, and you can't deny the breakdown. So it's time to look, south on the dollar on bounces and see if
yeah,
this is like Blake. I said, oh, maybe this is a fake out. Maybe this is, the tricks that these guys play before a big move. It's still possible, but I think, we'll review the dollar on the chart. But I
okay,
agree
buddy.
with you. I think it's a big sign.
I
And then
think
lastly, I
eventually.
want to
Go ahead.
I want to go over the 1968 analog. You like these, Dale. This one's
Oh,
pretty
the DNC in Chicago.
unbelievable, man. You wait till you see the slide with all the parallels. It's crazy.
Oh, I
Absolutely
was out
crazy.
there with
The
out there with
protesters?
Jerry Rubin and those guys. I was out there. No, I
Wow.
wasn't. I was home watching a Cubs game.
You were too young.
Anyway,
You were too
huh?
young to be out there.
No, that was high school.
Yeah.
That's how old I am. Anyway, but yeah, I'm not a big protester. It's not. I prefer to be comfortable.
There you
Having a
go.
brewski, yeah, very probably, yeah. Coors was a big treat when you lived in Chicago. People used to pack Coors in their suitcase when they went to Colorado and
Yeah,
bring it
they'd
back.
bootleg it back from
Remember
Colorado.
that, man?
Yeah, I
Yeah.
do. I
Well,
absolutely do.
all right, let's get back to it, or we'll never. Oh, look at that. Confidence in institutions. Yeah.
Yeah, this is sort of the epic cycle effects and I found these charts which I think perfectly illustrate what I've been talking about, on your show and your interviews for years now, that these things, it's a bigger cycle. So, everybody that was looking for it the next week, may have dismissed it, but you can see the trends, right? Here's just the confidence in major institutions. It's collapsing, and it has not shown a sign of buffering either.
I don't know
Um,
what to believe anymore. I really,
it's really difficult. It's really difficult.
I
This one, I like this chart a lot because this table, because it shows where we are compared to the all-time lows with confidence in each of these institutions. And look at how many of them are 2022, 2023 as the low.
yeah,
And it's across the
wow,
board, right? You can't say, oh,
yeah,
this is a right wing thing, this is a left wing thing. It's everything.
yeah.
And then the last one, the last slide related to this is an interesting one too. It just shows year to year, last 3 years, what's been happening.
Yeah.
So the reason why we talk about this and the reason why it's important is because it's going to affect people's confidence and it's going to affect people's decision making. And that obviously affects asset prices. Now, the counter trend narrative that we get from governments and authorities is all is well.
Oh, yeah.
Nothing's wrong. It's a conspiracy theory. It's this, it's that. That they have to do this because they can't acknowledge that they're losing control and they're losing people's confidence. But all is not well. And I think in our bones, deep down, everybody knows it. Even the people who want it to be well know it. So let's shift from, okay, this is how people are feeling. Let's go to what's the economy doing? Would you buy or sell this if it was a stock?
Yeah. Nice. The bigger the base, the bigger the launch into space.
Absolutely. I mean,
That's a nice base.
this is a bullish chart, and this is
Yeah.
the unemployment rate.
Yeah.
So we can
It could at
expect
least correct, or at least there's a bounce coming. And it looks like it's turning up here.
Yeah, absolutely, absolutely.
Okay.
So that's a tell on the economy.
You're fired, Ben. The chart just went out.
And
Just
here's
upticked a
inflation.
little bit.
Here's inflation, right?
Yeah.
Everybody there's an interesting thing.
We
People
beat
say,
it.
"Oh, inflation is done. It's
Flip it now.
2.9% year over year." That
Yeah.
doesn't mean prices are coming down. It means they're just rising more slowly.
Yeah.
And that's what people
Right.
don't get, is that it doesn't mean we're going back to the prices we had,
Right.
Pre-pandemic.
We've slowed down the acceleration of a huge burst that
That's
will
right.
never get. The only thing that would take it back down there would be
A
a
depression.
very severe recession slash depression,
Yep, that's
where
right.
demand just goes away for everyone because everyone's broke.
Here's an interesting one on inflation, Dale. You'll like this one. I think we've experienced this part here,
Yeah.
right? We had the spike and now we're
Yeah.
moderating a little bit. But
Yeah.
look what's coming if this cycle
Yeah.
repeats.
Right.
And
It's on
inflation,
steroids next
the
time.
key thing to notice, look, in the early 70s, inflation never went back to where it was before the inflation cycle started.
No, never.
And this may be, the figures may be accurate too. A little over 3% here. We're around 3% now. Maybe that is going to be our bottom. We'll see. We'll see. The outlook basically though is weaker economy without having inflation come down much from where we currently are.
And
Now,
it didn't come down until the highest green bars. And that was when Volcker came in and was draconian. And it still didn't take it back to 64 levels. But
no.
it sure felt like things got cheap. I was
Yeah,
around.
it's all relative, right? Now,
Yeah.
I'm not great on predictions, and trying to be a predictor in the market is a recipe for losing your money. But the next slide, I'm gonna show you my prediction for the election results, right? For the presidential election. There it is.
We
No
don't
matter
have one.
no matter
Yeah.
what happens,
Yeah. Right. I know.
we're going to be a fractured country.
Right.
Whichever side loses is not going to either they're not going to accept the results or they're not going to
Right.
accept the person that got elected as their president. And
Right.
that's a problem.
That is a problem.
and that's a problem. So
Okay.
that's something else we're going to have to deal with. I don't know when the market's going to start pricing that in. I don't know. I think the market doesn't know. And the interesting thing, if you look at a lot of the charts, like the longer term charts, there's so many of them that are triangulating. And they're triangulating because they're building up energy for some big move and some big event. I don't know what it is. I don't know when it's going to happen, but it's in the cards. And it
You mean
maybe
like
it's
WTI in a big triangle, things like that? Is that what you're talking about?
WTI. The dollar was in a triangle. Bonds
That's
were in
right.
a triangle.
Right.
Um,
Okay. Yeah.
Nat gas is in a triangle. Coffee was in a triangle. Copper was in a triangle. Gold broke out of a triangle already.
Okay.
That was the big move. So it's in the charts and it's coming. This is an interesting chart I saw. You may have seen it. Somebody posted it on Twitter. Global debt reached $315 trillion this year. And this is it. This is government, private, just total debt. It's not sustainable. The average percentage weight of GDP is now 333%. So something has to give. That debt is not going away. So they're going to something, they either have to inflate it away, they have to tax the living crap out of everybody to pay for it, or repudiate it.
Which do you think they're going to do? Maybe they try all three.
Maybe. I definitely think inflation is going to be a part of it. Definitely think inflation. Let's talk about the paper to hard assets. The reason I like to show this chart is we are also in a war cycle, which we've talked about in the past,
Yeah.
and wars are very inflationary and very good for hard assets. And you can see this is going back to the Napoleonic Wars and the War of 1812. We get a spike every time.
You know, I got short after that.
It was a good sell.
I that was my Waterloo trade.
You must have had the faster horse, right? You got short before everybody else.
No, I actually I was riding in a coach, like I told you before.
The royalty.
I like comfort. So anyway, yeah, that's so there's China's rise. Okay.
Yep.
All right.
Let's go. What about ports in the storm? Interestingly, I really think this chart is very interesting because commodities, everyone says, oh, well, when growth slows or we enter a recession, you got to sell the commodities because demand is just not there, right? And that is true. It happens. But look what happens after you're in a recession.
Yeah.
The commodities actually rise.
Yeah.
You know, as long as demand is not totally destroyed, I guess you kill enough supply to where these things do pretty well. So I think these hard assets and commodities are a good place to hide, you know, if you buy them at the right time.
You know, I heard it told this way, that we're going to have deflation in the things we own and inflation in the things we use.
Oh boy. That's a double whammy, huh?
Yeah. So then you're talking a bear market in real estate and
Mm-hmm,
stocks,
mm-hmm.
and you know, the grains might bottom someday. They're the thing that's been keeping people are complaining about food prices with where grains are now. Anyway, that could be it. So you know,
Yeah.
your net worth takes a huge hit, but your cost of living goes up at the same time.
Yeah, that's tough. That's a tough combination.
Is
And
that what
the
you
other,
see?
yeah. I mean that I think that's a real possibility. The other thing here is everyone is calling for rate cuts, right? Oh, we need rate cuts. Give us rate cuts. We want the rate cuts. The Fed needs to cut. This chart says be careful what you wish for. Because when you start cutting, the risk markets have trouble. And on average, given all these different cycles, if you look at this chart, this is a good chart. On average, the low in risk assets, or the S&P 500 in this case, arrives 62% of the way through the cycle. So from first cut to last cut, you take 62% of that time, and that's when you bottom out. So
Okay, I heard Grantham say that once they start cutting, the market doesn't bottom for 6 months.
Well, there you go.
I don't know if that means the same thing, but 6 months would take you from here, or
September to
maybe,
March. Yeah.
yeah,
Yeah.
June is where you have a big thing next year, right?
Yeah. Yep.
Okay.
Let's go to the next one. So this is for the Dale special. This is the 1968 analog. And let's go through these. It is, like I said, uncanny. Remember when I said a sitting president not running is a rare occurrence? I think it's happened 4 times in the history of our country. In 1968, LBJ didn't run.
Yeah.
Present day, Joe Biden doesn't run.
Right.
RFK challenged the sitting president in 1968 for the nomination. Today, RFK Jr. was challenging the sitting president for that nomination. He got sort of blocked out by the pretty well by the party, but he tried. Humphrey, who was LBJ's vice president, was the establishment pick. Harris, who is Biden's VP, is the establishment pick. Nixon, who was the Republican nominee, had lost his previous 2 national elections. He ran for governor of California, and he ran or statewide, and then he lost the presidency to Kennedy in 1960. Trump lost his last election against Biden. There was a third-party candidate in 1968, George Wallace. We have a third-party candidate in present day, RFK Jr. There was social unrest and protests. Obviously, we have the same thing. There was a very unpopular war called the War in Vietnam. We have 2 unpopular wars now that people are protesting, Ukraine and Gaza. This one blew me away. When I saw this, I said, holy moly. A major protest site in 1968 was at Columbia University, where the students took over 5 buildings and controlled them. What happened a couple months ago at Columbia?
Yeah, it must be the water.
It's the exact same thing.
Something in the water there, buddy.
I don't know, but it's same year, same thing. Assassinations. Unfortunately, Martin Luther King, Robert Kennedy were both assassinated in 1968. We've had an attempt on Trump's life already this year. You mentioned it. Chicago was the site of the Democratic Convention. Chicago is the site of the Democratic Convention. And here's another one. What's the chances of it? Election day, 1968 was November 5th. Present day, election day is November 5th.
Huh.
Not only do these events point to it, but my cycle work says we are repeating this 68 period right now. And the riots in Chicago outside of the convention. What I recommend for everyone is if you have a chance on the streaming service Max, on CNN, they have a documentary series called 1968. Watch it. It'll make you shiver because of the contrasts with how close things are and events are repeating from 1968 to today. So watch that if you have a chance. I knew you'd like this one, Dale, because it's just really uncanny how these things are happening.
Yeah, I was, looking forward to getting my driver's license in 68. So, okay. 68
there we go.
Extreme.
Let's talk about the opportunities now in the markets. We want to sell risk. We want to look at some epic cycle plays. Buy hard assets. I'll highlight energy and a soft. Then we're going to look at the dollar and bonds. Remember, I was bearish on bonds and bullish on the dollar, and both of those have flipped. So let's take a look why. Here's the ES Weekly. On your last interview with you, Dale, I was calling for a July high. We got it. I think we're going to get.
I took it.
Yeah, I think we're going to get in September, and it may end up being some sort of false break high in late August, early September. So we're in the zone now. Why I said the roller coaster's at the top. We're in the zone where I think we're going to top out and start heading lower. And
Yeah.
again, I don't know what the events or triggers or the reasoning's going to be. Maybe this is echoes
How
to
about your war cycle kicking in, and
could
that
be the
being the
war,
reason?
could be the war cycle. I think that's a big possible reason.
I mean, I think everything's cocked and loaded, and there's no ceasefire deal.
No, it's time to watch the technicals, right? The news isn't going to help you, but if you watch the technicals in the market, it'll guide you. We'll see, as I said, either a false break high or a lower high comes in and we
Yeah.
reverse, and that's the one you hit.
Okay.
I think the NQs are vulnerable. That's where the big excess was.
Right.
So this market,
The Mag 7 look worse than even the Nasdaq 100.
yeah.
There most of the Mag 7s. There's a few that might make new highs, like Meta, but it's going to be a 3 drive formation.
Mhm.
So, Amazon's not making new highs. Okay, there are some that are rallying with the market unless we have a melt up. Could we have a melt up to 6, 7,000?
I think 6 is probable.
Okay,
It's there if they get aggressive.
yeah,
But
okay,
again, we want to watch if we do push up into some kind of high, watch the technicals. Watch for divergences, watch for the 3 drives like Dale teaches, because those are the things, those are going to be the tells that the big boys are going to use the rally to get out.
Can we use the flash crash low as the Maginot Line? You should not be long under the low we put in this month.
I would definitely say that's true.
Okay,
Because the worst case scenario, you do an ABC. Best case scenario, you might catch a 3 on the way down, which is
yeah,
huge.
yeah,
All
okay,
right, let's
bro.
go to let's go to
Nice.
some epic cycle plays. I heard you guys talking about gold, and I agree with you. I think you can't buy it up on stilts. But look, we could correct all the way down to this 2100 area right in here and still be super bullish.
Yeah, I don't think it would get there, but boy, there might be one more bus stop to buy the stuff. Even the miners are acting good now.
Just
So
watch your technicals,
yeah,
buy it on pullback into support that holds, because as confidence erodes, gold does better. And I think we're in a period where that's going to be the lack of confidence is in a bull market. Silver, I think, is similar. I mean, look at this nice check back on a monthly basis we got this month, right? Right there.
yeah,
I think, $50 silver is possible on this run. And if
okay,
things really get going and it breaks out over those, 2011 highs, this thing could really, really move.
okay,
Here's one for the crypto guys. Bitcoin.
yeah, 100K,
I think so.
okay,
It's
41st,
yeah, it's been really bugging people, with
yeah,
this
this
sideways movement.
consolidation, yeah,
But look at what it did, Dale. I mean,
it's
basically
healthy. It's a flag, right?
it's a flag right on top of in
Yeah,
the area of the previous highs.
yeah, okay,
So and again, it's a anti-system sort of thing.
all right.
Let's look at crude
I'm trying it here with a reverse stop under 72
on
because we're
crude.
good or bad from here.
Yeah, I think you're right. I mean, and this, Dale, and you and Blake and everybody, you're so seasoned, you understand this. A lot of times, especially in commodities, a market will make one move in a direction to clean out stops, and then
Right.
it turns and makes the real move it was doing.
Yeah.
And you look in crude does it all the time.
That's war in the Middle East, that white line up there.
Yeah, that's right. But
Because
look
it's
at the
going to be
look
a
at
supply disruption because Europe is slipping back into recession. I mean, where's the demand? So it's not going to be demand driven. It's got to be a supply shock.
right. I
So
mean, look at this triangle.
yeah.
That's building up energy for the move.
Okay.
And here's
Nice.
an example of when it takes out the lows, right? Look,
Oh, well, we did that Monday in the currencies. Aussie, it flushed out. It was a lot of stop hunts that day.
absolutely. And the commodities
What did you
love to
think when
do
you
that.
saw VIX trade 60, man? What were you thinking to yourself when you saw the VIX do that?
I was like, Wow, that is some speed to get to 60. But I didn't think it, what I did is I started looking at what other assets were doing. And when bonds stopped getting bid, I said, okay, that's not going to last. The VIX is coming off, right? The
But I mean,
panic.
just the magnitude of the move for
Oh,
such a small move in other
colossal,
markets,
colossal.
is that a sign of market dysfunction?
I think it's a sign of it, yes, and a hair trigger, right? Everybody is like has one foot out the exit right now, waiting for the whatever shoe they think is
Yeah,
going to
there's
drop.
something weird. I don't know.
And I think that's
Something.
what these triangles are telling us, right? There's this indecision and this concern, and you know, this is a monthly triangle winding up,
Yeah. Okay.
ready for a big move. Here's natural gas, monthly
Yeah.
triangle.
It's been trying for a long time.
I know if you look at this though, look at the value level this has shown
Yeah.
throughout the
Yeah.
years.
Great point. You just have to
So
be patient,
wait for the break, right? Wait for the break and then
or
buy
just
it.
be patient. You know.
Yep. Coffee, here's one. I don't know what's going on with the coffee crop, but we broke out of the triangle and now we're,
Yeah.
we're
That looks
trying
pretty
to
good.
break out
Yeah.
here. Really
Yeah.
nice monthly
Could
pattern.
have pulled a cocoa.
It could.
Uh,
Let's get to the dollar. So here's the dollar. This is the triangle, right? I thought, okay, we're in this triangle and we're going to break up because it was like on support. But what the couple things to look at here are the there's an ABC target at 99.83, which is at your par level, right? Right
uh,
at your par level. And the half square here, which could act as support, is at like right at night, right around 98.
that's one of my targets, 97, 98.
Yep.
Where's the
So
bottom one?
the bottom one's probably around, I
The
can't,
bottom blue line.
oh, the trend line, that's
Yeah,
probably
yeah.
around 94, 95, something like that.
Oh, that is. How about the lower trend line?
I don't know. I can't see that
Oh,
one.
okay.
I can't see that on the
All
chart.
right.
But
Well, that's
so
where it's going.
it's possible. Absolutely. Listen, we broke out of that triangle, so it's
Yeah.
bearish.
Yeah.
If
It's
it
bearish.
pulls back to this triangle and can't get above the apex, you
Yeah.
sell the hell out of it.
Yeah.
Until it proves that okay, it's just an ABCD or it's a false break and reverses, you got it. You got to sell it.
I think this is important, Ben. I don't know how you look at it, but uh, any nation whose currency is, you know, at the beginning doesn't look bad, but you know, it could end up looking pretty ugly. It's not a vote of confidence for the U.S.
No, and you know what, Dale? What dawned on me again, getting back to this sort of paper to hard assets thing, is the dollar was the safe haven, right? Everyone went to the
Yeah,
dollar when things got rough. Maybe
right.
they're not
That's
going to the dollar now. Maybe they're going
no
to gold, silver, or
Aussie, Canadian commodity
maybe,
currencies.
maybe they're going to commodity currencies or things
Very
that are
bullish,
backed by
Canada.
hard
Yeah,
assets. So
yeah, yeah,
that's what this could be telling us, this breakdown.
yeah. And
Here's
maybe
bonds,
the yeah. Okay. So where's that line come in? 120 up above it.
132 and a half.
Wow. Okay.
That's where the ABCD target is.
Yeah.
You can see
Okay.
we were in this little triangle. I told you a
Right.
lot of these markets were triangulating. We broke out. So I think we're heading potentially to one, bonds are rallying here.
Yeah.
At which time, let's say we fail there, it's a hell of a sell.
Yeah. Okay.
And
I
longer
was
term, if we
on it.
get the inflation, it probably is going to be a sell.
Yeah.
And that's it. That's
I
it
think
for
you're strong.
there's our little channel. People can check us out. We do a weekly video. Um, And if you want to follow me or reach me or see what my stuff is, there's the Twitter handle.
You know what, Ben? I have one more analog for 1968.
What's that?
You ever hear of a band called the Hands of Time?
No.
Okay. Well, the Hands of Time was a band formed in at Niles North High School,
Hmm.
and one of their biggest cover songs that they did was from that year, right around 1968.
Wow. I'm
Will
telling
you
you that
talk about my baby? Yeah, she come around about 5'4" from her head to the ground. Well, she come around here just about midnight. She make me feel so good. She make me feel all right. And her name is G. L. You get the picture. That's my
Nice.
sister's name. Anyway, in 1968, we've come back from the time machine.
Let me tell you though, your voice is strong today, my friend. Strong.
Anyway, I'm rocking here at 6:10 a.m. what a career. Anyway, Ben, you know, I consider you a friend, and you've been coming here, and we've been watching things unfold. How you ever came across the epic cycle and finding all these market analogs. Great work. I know you didn't just read a book about the epic cycle and then put it together. So all the good analysts I know are relentless workers, and because it's not work, they enjoy looking into things and trying to prepare people and be a watchman. So you're actually a watchman for people, because the messages that you're giving them give them things to think about and possibly things to do, actionable things to do to prepare themselves for, the fourth turning.
Yeah.
So want to thank you for doing that for us here at in Face.
My pleasure, Dale. And you said it at the beginning of today's show. You said you got to have curiosity because it all starts with being curious. If
Yeah.
you want to find out about things, it starts with having that innate sense of curiosity. Like, okay, why is that? How does that work?
Someone
And
just said in 1968 the market peaked in November. I don't think it'll last that long.
I don't
But
either.
anyway, and there is maximum sunspot activity that Patrick has been bringing up. We're like
Interesting.
at maximums, which is,
What does
kind
that
of like
do?
it increases activity. It's usually bullish for the market. When the solar activity is slow and the sun is inactive, is usually when you start to have more depressed, slower economic growth, lower
Mhm.
activity, less electrons causing things to, you know, act volatile and out of sync. So when the sun calms down, the market will calm down. And anyway, that's all I know about the solar cycles. Some people live by like you live by the epic cycle. They forecast off sunspots.
Right.
Okay, especially agricultural markets. Because they could pretend weather changes too. Um, that's it, bro. What a great interview. Uh, but this is a good one. Let's get it out there and have as many people as possible view it and get ready, okay, for whatever is coming. And you and I will be talking um, after the flag fractures in November.
Yeah. And
Will be the
remember
next.
everybody, let's leave on a positive note.
Oh,
Daylight
don't ruin it. Don't ruin it with anything positive,
daylight
man.
follows darkness. So it will get better after we go through the dark period.
Beautiful.
We have to get through it. That's all.
There may be weeping in the evening and through the night, but there will be joy in the morning.
There you go.
All right, everyone. Rejoice. Today's a good day. All right, everyone. Have hey, you only have a minute to get to the morning edge. And I had a great time talking to Ben. Hope you enjoyed it. It's recorded. You could do it again and read it. Yeah, read the video. Anyway, Ben, I had a great time, buddy.
Thanks, Dale. Always the best spending time with you.
Follow Ben on X. at his name at Ben with 2 N's, Maldonado, and check out his videos. Should be part of everyone's intelligence gathering. All right, everyone. Adios. Don't just count your cycles, count your blessings. I'll see you later.
Take care.
Adios.